Good morning. My name is Dr. Deepika Tapadia. Today I'll be discussing about a very important concept of accounting, that is journalizing the transaction. This is one of the important and basic steps used in accounting. Starting with the basic definition, what do you mean by journalizing the transaction? This is the process of recording and tracking any transaction that your business perform. The business accounting cycle is a multiple step process that record and analyze your financial information. This cycle starts with journalizing the transaction. This is the first and the basic transactions. The basic definition: the process of journalizing transaction refers to the initial recording of all the financial transaction of a business. This recording is done by listening or listing the journal entries into the journal. Journal entry is that they follow the double entry bookkeeping method. In double entry, every recorded transaction causes a change in at least two accounts. If any entry in the accounting basically affects the two account, one will be debit and other one will be credited. Once the journal entry are done, they go into the journal, which is a chronicle day by day accounting book that summarizes business transaction. What are the basic importance of journalizing? The first and the most important purpose of journalizing transaction is to keep your business finance accurate and well organized. The journal recorded this data chronically through debit and credit, which makes the information clear to overview and accounting error easy to spot. Secondly, these records are necessary for businesses to eventually create their financial statement, which is the essential goal of the accounting cycle. With these financial statement, auditor can analyze how transaction impacts the business. Lastly, journalizing is also an important part for the stakeholders and other interested third parties like creditors, investors, shareholders, tax authorities all required full financial transparency to decide whether or not your business is worth investing in or following accounting principles. Next are steps involved in journalizing the transaction. The step involved in journalizing are basically listed below. Journalizing can result in entries to the journal ledger or to subsidiary ledger. An entry is made to a subsidiary ledger when it involves a high volume transaction that management has decided to summarize separately from the general ledger. Step number 1: identifying the transaction step type. In the first step, individual must determine the type of business transaction that has taken place. Every transaction involves two accounts, one is debit and the other one is credit. Step number 2: analyzing the transaction. Organization must analyze the transaction and identify the account type accurately. A few common type of accounts are liability, expenses, asset, revenue. Third step: apply the basic accounting equation to the transaction. Businesses must balance every financial transaction, assuring the sum of the credit is always the same as the sum of the debit. In other words, they must assure that they debit all corresponding account every time they credit one. And the fourth step, journalizing the transaction. Businesses must record the financial transaction correctly in the right journal to complete the journalizing procedure. Also, they must assure to enter the data or the date and provide a short transaction description. So, these are some of the steps involved in journalizing the transaction. Thank you so much.